Moment. Europe's biggest bank did help boost financial stocks with its surprise profit. HSBC reporting first-half income of $3.35 billion. Now, that was only half as much as a year earlier, but it easily beat analyst estimates. They were looking for a loss. Earnings from the securities unit more than doubled. Bad loan charges rose less than estimated. CLSA's Daniel Tabush is the top-ranked analyst on the bank stocks he covers. He recommends selling HSBC, at least he did up until the results came out. He joins us this morning from Bangkok. Daniel, very good day. Thanks for joining us. I've got a note, as I'm sure you're aware, that there have been price upgrades from Goldman Sachs and UBS on HSBC. There may be upgrades on the stocks. Those two are already recommended to buy. Will you be revising your opinion?
Well, we're going to have to review the numbers, notably because of dealing income being especially strong and operating costs. But we're comfortable with our provision cycle estimates.
Right. I mean, you've been vindicated so far. You've had to sell since at least 2005 on HSBC, and it has been a terrible performer, the worst performer on the Hang Seng over the last 52 weeks. I mean, what specifically are you looking for that would allow you to upgrade?
Well, it's really a trend in NPL formation, which is easing. And actually, what we're seeing is an acceleration of NPLs coming out of Europe. That was up about 50 or 60% in the half. And certainly in Asia, all regions are showing growth. And one thing to bear in mind is that first half NPLs and provisions out of USA are seasonally low. So we're still comfortable with the cycle, but we have to see some easing there to get more comfortable with lower provision costs.
Yeah, I mean, tell me a little bit more about that U.S. unit, particularly household finance, of course, which is where a lot of the problems have come from. When you look at the broader economy and the housing market and so on, do you see signs that some of these impairments will go away? In fact, we may get write-backs?
Oh, yeah, we'll definitely get write-backs. Most banks will announce write-backs, but usually that's well into recovery. It's usually not at the bottom of a downturn.
Okay, so in the meantime, I mean, how much concern do you see out there that things could get worse? That, yeah, the recovery we've seen, rising asset prices and so on, and some signs of a bottoming out in house prices, signs that may only be temporary, that things may get worse. Do you see anything like that?
At the moment, we're seeing improving signs of deterioration, so less deterioration, or the pace of deterioration is not as bad, and that's great. What you want to see is actually recovery. But remember, there's still a lagged impact on NPLs and provisions. It doesn't mean that the pace of NPL growth or provision growth will be as high as it was in 2007 or even 2008, but the numbers will still be a concern.
Okay. You've noted also, as you said, dealing income was relatively strong. Operating costs were relatively low. I mean, clearly HSBC has had a lot of success with its cost-cutting program, yes?
Oh, yeah, definitely. And part of that will be due to it lowering its book in North America, which is down a lot over the past 2 years, and efficiency gains, and that's positive.
And likewise, we're seeing growth in Asia. Now, earnings, of course, were down in Asia as they were around the world. I think something like 29%, I forget the exact number. But you see a great deal of potential for further growth given HSBC's exposure here in Asia.
Yeah, there's definitely room for growth as the cycle turns, but we have to remember that the provision costs are coming up off of a low base. And remember, this is the first period in every single region in which it operates where you have fairly meaningful growth in bad loans. So that still has to run its course.
It's also, of course, not going to be able to operate alone in Asia by any means. It's got some stiff competition. Standard Chartered, which is a stock that you like, you have a buy recommendation on. We now have ANZ buying RBS's assets in Asia, so making a giant leap into the Asian space itself as well. How much, I mean, how are these companies like to battle it out, do you think?
Well, remember, there's a big difference between HSBC and Standard Chartered, whereas you have all the negatives of the US and UK hurting HSBC, and all the positives of lower costs and better dealing at Standard Chartered, with none of those negatives. So it's much easier for Standard Chartered to take on risk-weighted assets and to take on risk.
And so, I mean, given that you have preferred Standard Chartered in the past over HSBC, you're likely to continue that right now.
That's likely, yes. We have to review the numbers, but the most important thing out of the numbers when they come out late today is going to be the lack of those negatives out of the US and UK that hurt HSBC, but all of the positives, the strong dealing and the lower costs.
And just a quick note on the Japanese lenders. I mean, you've got underperforms on the big ones. Does that continue?
Yeah, remember here too, for Mitsuho and SMFG, very high seasonality in quarterly provision costs. The numbers were down about 70% in the first quarter. Those numbers will be higher. The other two banks reported much better numbers, Rezona and MUFG.
Okay, Daniel, thank you very much indeed for your time today. Daniel Tabush of CLSA joining us there. He's the top-ranked analyst for the stocks he covers as measured by Bloomberg.